inflation numbers dropping right now. So year on year, straight up, looking at 1.8%, coming in weaker than estimates, and sequentially for May, also coming in weaker. Same deal if you back out food and you back out energy on a year-on-year basis, bang in line with 2%, but softer than expectations and softer than the month before. And a month on month, you're just eking out something, coming up at 0.1 of 1%. The earnings, the inflation just not there.
The president is right at least about one thing. He says there's no inflation. He's right. There's no inflation. We had the PPI yesterday. We had the CPI today.
And you talk about inflation expectations sort of being just stuck in the doldrums, not be able to move anywhere. Some were saying, oh, it's just risk off. Oh, it's just, tip selling and all of that. But if there's something fundamental here, if you can't get any action and oil keeps rolling over, well, there you go. That ties into weaker inflation. Okay, we have Michael McKee, Bloomberg International Economist and Policy Correspondent, here to explain it all to us. Mike?
Well, I'm looking at the breakdown here, and it does look like it's all Alex's fault. Energy prices down 0.6 after rising 3% the month before. So energy playing a big role in the flatness of the overall headline inflation. And it's a reason why we're seeing the core inflation stay a little bit higher than the others. But some of the categories that you normally see that the Fed's been worried about, not as bad. Apparel flat on the month after a decline of 0.8 and 1.9% the previous 2 months, and that was one that they were looking at. Transportation prices, which would be cars, down 0.3. That's an interesting one. There was more discounting last month, but medical care hangs in there, up 0.3, and housing up 0.3, which has been kind of the pattern there. So you can't really say there's no inflation. It's a highly concentrated drop in the disinflation areas for the most part, to the energy sector.
So what we're seeing then, you're seeing more buying coming into the bond market. It looks like the dollar thus drops. I mean, it feels like it's more of, it's two-pronged. It's one, you're going to wind up seeing the Fed definitely cutting, but also I'm scared about longer-term growth at the same time.
Yeah, it basically makes the Fed's case that there may be some transitory aspects to this. And of course, they're not going to worry about energy prices because they bounce around so much, which is why we have the core rate. The core rate hung in there. A little bit lower than it was last month, but it's not dropping significantly. So they'll feel like we don't have a case to be made on an inflation basis necessarily to cut rates at this point.